Good morning, it's Friday, May 24th, about 6 a.m. Central Time. Overnight, the precious metals are higher after a two-day sell-off. You got gold futures up $5, silver futures up 30 cents, and copper futures are up about 1. Even platinum slightly higher, up $4. So yesterday, gold and silver attempted a recovery before the bell. It was between about 7 a.m., shrugged off that little bit better than expected initial claims number, the number coming in lower than expected. Really, that bull bear line on the initial claims is 220. You want to see a number above that to get the deterioration in the employment data in order to further support interest rate cuts. But before the bell, we saw that flash services PMI number, and it really derailed all hopes after posting a number at the highest level in nearly 2 years. The figure came out at 54.8. The print above 50 indicates expansion and is a leading indicator of economic health. So hopes for the interest rate cuts. Remember, they were looking at September and December in 2024. The swaps repriced in just one cut. So today we're going to see the release of durable goods and a revised University of Michigan inflation expectations. I really think that's probably the last number that people are going to hang on to this week, and people will call it an early day here with an extended holiday. I hope you guys all have a great Memorial Day weekend. So looking at the performance data here this week, I don't think things seem as bad as the way they felt when you get it seemed like 2 days of just gut punching on the silver market, falling about $1.50 and another $1.20 the next day. We look at how the performance is and take it back to the numbers. So worst performing commodity, down 5% on the week, is the copper market. Crude oil also down 4%, gold down 3%, silver down only about 1.5%. So feels like it would have been much worse for the silver market. I guess when you look at the $1.50 sell-off and then you get another dollar something sell-off, percentage-wise, if we were trading at $22, $23, it would really feel devastating. But when you get to these higher levels, it's going to take a lot more to get these bigger sell-offs here. Now, something to note is that when silver hit $32 in 2011, it went on a 10-week bull run up to the $50 level, and it was quite volatile in action, giving you many duck and weave type moves. You felt like you were going against Muhammad Ali or Mike Tyson, to say. So looking at the copper futures chart, so it has gone neutral trend. So neutral trend is kind of where you just want to nibble at some prices. Maybe you just play the range just a bit, in my opinion. Kind of that bull bear line is the 450 level, 453 on the July contract, where if we close below there, it's going to be pressing the 200-day moving average, and chances are the party is just over at the moment. You're going to be in a wait and see type of thing, looking for more evidence that they're going to continue to see supply deficits and increased demand. So that's where you really need China to step up things as far as posting better economic data. Now, if we get a close back over the 490 level, I think party's back on. I think futures prices should attempt to threaten the $5 level again, and I think that we could break out and see another rally. Now, the gold futures rolling back over again, down about 3% on the week, so a fairly large move. 23.51 is kind of your critical level of support, and 23.26 is the 200-day moving average. You don't want to see futures break below there. They'll go neutral trend again. And a lot of times when markets go neutral trend, I start to look at more of the call options, the call spreads, things like that, waiting for my thesis to prove itself again and the market to head back in my direction. Now, getting into the silver markets, and silver's acceleration about the last week and a half, 2 weeks, when we got that breakout point, we went up to about 32.50. Since then, we've settled back. I really think that 32.50 to the $30 is kind of your bracket range. You don't want to see July futures close below $30. It's not going to take it to a neutral trend. It will actually most likely entice more and new participants to come into the market, which will further strengthen the underlying support, building a better foundation on the rally. So you look at your critical level of support, though, where things would start to get ugly, is way down at 23.31 on the July contract, and then below that 27.93 is going to be your 200-day moving average. A lot of people will pay attention to that. The platinum market has sold off pretty dramatic. Again, one of the worst commodities this week, down 5%. 1100's the breakout point to the upside, and you want to see prices hold $1,000. So keep an eye on the dollar index, because the dollar index did post a bit of a high here yesterday and kind of broke out. It's had quietly marching about 5 days higher here. And now today we've got a little bit of a sell-off here, and we're starting to come down just a bit here. So we're going to want to keep an eye on that. But really, it's a weekend of rest and relaxation. I know all my partners and everyone, we're all dispersing and going to different places here. So enjoying that weekend, enjoying some barbecue and some time with family and friends. So you guys got any questions, give me a call, reach out to me, shoot me a text over the weekend. Probably going to be just doing some fishing, some barbecue, and got a Boston butt going in the smoker. So that's always a fan favorite. You could feed an army. I could solve world hunger just by smoking Boston butts out there. I'm telling you, $40 you could feed 8 to 12 people easily. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.